All right, Candle Range Theory Trader back with you with another video on the weekend review for this past week, the 6th through the 10th. So no need to waste time. Let's get right into it. And as well, I'm going to cover pretty much the main setups that we've gone over here in last weeks and weeks. So we're going to look at the daily 3x3s, the 4-hour 3x3s, and the basic CRT Candle Range Theory trend in line, or trade in line with trend. So if you don't know what I say that, the links are in the, you don't know what I mean when I say that, just look at the links in the description. It explains all those setups in detail. All right, so first we're going to start off with daily chart 3x3 trades. Some of them I'll go into more detail than others, but this is the daily chart for the dollar yen. So this was a stellar week for this big drop. I did manage to get a little bit of a piece of this, but not the whole thing. I wish I would have held longer, but Friday was just a crazy market day. A lot of stuff tanked. So, again, remember our rules. We got three. We got a close here. This was Monday. But our main three candles were this one, and this one. This is our range candle right here. Because we could have started trying to go short here, but that would have likely been a stop out or a small loss, or possibly even a break even. The best day to go short would have been on Friday, believe it or not. Once this range candle was created, we waited for the high of this day, and then price straight tanked all of Friday. So that was a great trade there. And as well, this was more of a traditional 3x3 daily chart trade along with a continuation day. So if you saw the deep study on 3x3, the longest video on here, it talks about the continuation trade where when you see a 3x3 trade on the daily chart and the first day gives you that downward action and there's still room to go to the downside, then the next day you want to try to just take a continuation from this high down, and you can expect a breakout of the range or just a big move. But this move is pretty much over. I wouldn't try to trade this again. If I didn't get in here or here, that was pretty much it. So I'm not going to be looking at Canadian yen for the next day, but let's take a look at this continuation day trade on Friday. Let's drill down on that one. So this price action here, this is the 5-minute chart for this big red candle here. This is Friday. So our best entry would have been after the 8:30 news came out. The money candle, which created the high of the day, was at 7:10 p.m. Eastern Standard Time. But the best entry would have come from between 8:40 and 10:15. I did consider taking this because with continuation trades, if it's around the daily open, it's possible that you can get a good entry because we want our entry to be in the wick of the daily candle. You're really just trying to catch the wick of the continuation move. You're trying to catch the wick here and the wick here. Okay, I hope that makes sense. So if price is above the daily open, you're in the wick if price closes red. And same for longs in reverse. If you catch the wick of a long daily candle, you're in the wick of the bottom range. So that's that. But anyway, price fell 115 pips from the entry. So that was a great trade. So again, this was a continuation day trade. So from the 3x3 model. All right, so let's keep going. Let's see, amazing drop off here as well. We had Monday, Tuesday, Wednesday. So we had those, you count two and then you're through. You're going to start going short on day 4. So you let these 3 days play out. You see a strong close. Now you start thinking, okay, it might be time for the market to pull back. So this is just the same thing. This is Aussie yen, but all the yens tanked on Friday. So tremendous drop here. So you had 2 chances to get it, either Thursday, which was this candle, or Friday, which was this candle. All right, so either one of those would have been great. So no trade, obviously, for that on Monday. I would not try to trade this Monday. This is the move I would have been anticipating. So, I'm not watching any yen pairs on Monday. I'm just not. Next up, dollar pound. So we have another 3x3. This is a long example. So we have candle 1, candle 2. Now while I like for candle 2 to close below candle 1, sometimes that does not happen. Sometimes it'll just poke below it and then close inside of it. That can happen. So in order to still consider this a reversal, candle 3 needs to have a very strong close. And that's what happened here. So sometimes you'll see this where you'll see the 3 red candles. And the main thing that's going to determine if this is a range worth trading is if candle 3 has a very strong close after that, which makes up for the fact that this candle 2 didn't close below candle 1. So we're still talking about a 3 candle pattern. It's just that if you see this and this strikes your eye, you want to wait one more day for a strong close. And then, of course, day 4, or candle 4, that's when you start looking to go long for a possible pullback. So that's what happened here. So this was Tuesday, Wednesday, Thursday. Friday gave the setup, so let's take a look at that on the 5-minute. Your first entry could have been here. This was a legit money candle. The low of the day was created at London, and then it went up a little bit, but then as you can see, it came back. This would have been a stop out, all right? But when you see this price action, when you see these 3 candles, don't give up because sometimes it's just creating a double bottom or a W pattern, And when it does that, go here, the first leg, this is leg one, this is leg two. Sometimes leg two can be lower than leg one. That does happen. So just because you get stopped out, it's no big deal. So let's say hypothetically you lose like $10 on this one, but then price action comes back, closes above the money candle right about here at, what was that, 7:15. You had plenty of time to get in because price consolidated from 7 to 15 all the way to 10 o'clock. But once it takes off, it was gone. As you can see, price rose 90 pips. I did take this trade, but I did get out around the daily open, as that's typically my price target for these types of trades. Whoops, sorry. But had I stayed in, I would have made a lot more money that day. But oh well, I'm thankful for what I got. Any profit I'll take. I'm thankful for that. So I don't. If you miss a big move, still, if you made money, don't complain. All right. So, and as well, sometimes if you want to hold a little longer, this may also give you the confidence to hold a little longer. But these tremendously large candles here, that's it. Now, once you start seeing this, the moves are done. It spent the rest of the day consolidation. This is your move right here, and then you just go ahead and get out. All right. But that was a great trade. So here we go. Now, these are 4-hour 3x3 candles. I do like for the first 3 candles of the day to create the 3 candles, the 3 red or 3 greens before I start going the opposite way. But sometimes price will vary, as we'll see right here. And sometimes, you just have to be flexible. So this candle right here was actually the 1 p.m. candle on Tuesday. All right. So what happens is that you just see a low. All right. And sometimes it'll cross between days. You have to be flexible sometimes. Price may not do what you want it to do the exact same time, but if as long as it fits your criteria and you manage to be up, or if you want to trade that time frame, this is all the price action is still the same. So candle 1, candle 2, then candle 3. Candle 3 is always our range candle. See the strong close below. So we'd like to see those subsequent closes, close below this low here, close below this low here. Now I can start thinking about going the other way right here on candle number 4. Same price action, okay? We're catching the low of the day, and then next candle, boom, we're out. All right, so that's it. So let's see the entry. Our trading time frame was between 1 a.m. and 5 a.m. because the first 2 candles it crossed between days between Tuesday and Wednesday. So let's take a look. Best trade entry would have been around 2 a.m. Eastern, 2:55 a.m., close to 3 o'clock, and you would have got around 1 to 2.5. This was on Aussie dollar, so it didn't move a whole lot, but as you can see, it did manage to hit the price, the daily open price. So that's why I try to get out around that time frame is good, or the range high, either way. It wasn't a huge range, but this is still the type of price action we like to see, okay? So low of the day, and then the expansion candle comes on the next 4 hours, and you're done, okay? Because it just pinned it, as you can see, pinned the daily open and the weekly open, came right back down. So that was your move. Okay, so that was that. Let's see. Next up, let me see. What do we have? Euro pound. Okay, I think these are in the wrong. No, they're not. Okay, so let's go here. So this is Euro pound. This is how the price, and these slides may be out of order, so forgive me, but this is the price action. Candle 1, candle 2, candle 3. I didn't take a picture, the first picture. All right, so this is like the finished product. Best entry would have been at 540. And even with like a 10 pip stop loss, you would have survived this drawdown right here because price did come back, but it's just a double bottom, leg 1, leg 2. And again, the result was right here. So this is where you start trading. And again, this is where price came back down there. So yeah, it pinned it, but it didn't close and completely just take out. This was a very mild close because Euro pound is not a very volatile pair. It doesn't move a lot. Price did break out of the range, but like I said, you could have got a 1 to 2 to 1 to 3 on that one. So that was a good trade. All right, so next one. These are trend trades with the 50 EMA. So again, if you don't know what I mean when I say trading trend, link is in the description for that video that explains that. So let's take a look at a couple pairs that were trend trades using the 50 EMA as a trend indicator. And remember, if price is above the 50 EMA, you're looking for the basic 2 to 3 candle range theory setup. All right. So here's the first one. So remember, step 1, where is price in relation to the 50 EMA? That's this blue line. It's below it. So what does that mean? I'm looking for shorts. Step 2, I isolate a range candle on the 4-hour chart. So that the range candle was 2100 hours. Step 3, you wait for your, you can say your manipulation candle, range candle, money candle, whatever. And that came at 1 a.m. Now the catch with this though, is that you're not trading this manipulation candle. You wait for, this takes 8 hours to set up, candle 1 and candle 2. Once this high is met and closes, then you start trading on candle 3. So it's a little different from the 3x3 pattern in the sense that you want price to stay inside the range, and you also want price to break out of the range if you're trading trend. So that's why you had, 8 hours of consolidation and then 8 hours of drop because it's below the 50 EMA. Okay, that's our trend indicator on the 4-hour chart. So that's that one. So that was a good trade. And then this is another one. This was pound dollar. So step 1, price is below this blue line, the 50 EMA. Step 2, we look for our range candle that creates the initial high of the day. That was at 5 p.m. on Wednesday. Step 3, you wait for the money candle right here on the 4-hour chart that makes the new high, closes inside the range. And then step 4, now you're clear to start trading. Can price sometimes poke outside the range again? Yes, but at the same time, you're still trying to catch that wick. And price dropped over 100 pips because you're trading trend. And when you trade trend, you expect price to have a very big move to the downside. So that's the trend trading for the 50 EMA. And then I think this is the last one. So this is dollar Swiss on Thursday. So step 1, where is price in relation to the 50 EMA? It's above it. So I want to go long. Next step is to find a range candle that happened at 1500. And then the money candle that created the low of the day was right here. The next 4 hours. So remember, we got 8 hours of consolidation. Then you got 8 to 12 hours of the price move. This was a 3 candle move. So the thing with this is that price didn't close inside the range immediately, but you do want this middle candle in the candle range theory when you're trading trend to create the low of the day. And this low should hold. All right, that's your main test. But you don't start trading this until candle 3 opens and starts. Okay, but we'll take a look at that and see, because price rose 60 pips. And when you trade trend, remember that it's likely to just go ahead and break on out of that range. So let's see. But remember, like I said, on the 15 or 5-minute chart, either one of those, I trade 5-minute. Do not take a trade until price closes inside the range, and that helps protect your downside and keeps you out of bad moves. So price closed inside the range at 1:45 a.m. Eastern Standard Time. It went up. You could have got out right here, but this was a small range. So, and that's why when it goes up right here, you shouldn't be adding to your trades. If you want to scale in, you always scale in near the range bottom. It gave you another chance to get in. This is your basic double bottom. And look how the low of the day was not disturbed. It did hold. So it gave you another chance to get in long down here. You could have added to some positions right here or even here. Ideally below the daily open, because remember, we like to catch the wick, and that this price action below the daily open is what creates the wick. And then once price takes off, it took off for 60 pips. So you could have got, if you had, say, a 10 pip stop loss, you could have got 6 times your risk on any one of those. So say if you had if you're risking $10 a position, you could have got 60, 60, 120, 180. Across 3 positions, you would have got $360 profits or somewhere in there. So, this was your time to get in over here, and you got a second chance here. You won't always get a second chance, but when you do, take it. All right. And then price just did a straight rise. So at the end of the day, this was just some of them. You got to take your pick. Do you like this 3x3 pattern on the daily or 4-hour? Or maybe you just rather trade trend. You got to experiment. Maybe you have your own candle range theory you've developed. That's fine too. But do what works for you. That's the main thing. Okay, so you got your baseline model right here. These are just simple markups. Does this appeal to you more? Or does something like this appeal to you more? I can't make that decision for you. The one thing I would strongly recommend is that you manage risk no matter what you do and have fun with it. So I appreciate you watching. Those are just some of the trades of the week. Next week should be a good week as well. So have a great day. Keep trading, and thanks for watching. Take care.